This simple strategy would have made you over $50,000 in the last year using 100k funded. What is this strategy? Essentially, our job as traders is to move with the market, move with the institutional funds such as JP Morgan and Goldman Sachs. If we follow their direction, we're most likely going to have profitable trades. Now, how can we follow their direction? These are by use of untested highs and lows, in which that can be manipulated to go in our direction by following the market orders that institutional funds such as JP Morgan and Goldman Sachs take. So, what do I exactly mean? JP Morgan and Goldman Sachs like to fill their orders on these untested highs and lows, as day traders such as ourselves like to put our orders there, and then they take these orders and basically use us as liquidity, make us hit our stop loss, and then move in the direction that we actually wanted to go to. So our job is to follow these institutional funds and basically be profitable by following what they do. So let's go ahead and have a look at what this strategy is. So the first thing you want to do is go on ES Futures and go on the 1 hour time frame. Then you want to see any untested highs and lows from the previous days and sessions. So as you can see, I'm marking out the previous highs of the day and different lows. This is the real-time market from today. So we'll see how it played out. I took a trade using this strategy today. So as you can see, I marked all my highs and lows that I needed. Then we drop onto a 5-minute time frame. Why the 5-minute time frame and not the 15-minute or 1-minute time frame? The 5-minute time frame essentially tells you whether the price is going to reverse at these points or whether it's going to break it and continue to drive in these areas to the upside or the downside. So let's go to a 5-minute time frame. Now let's mark out when session open at 2:30 GMT. So 9:30 EST, we trade the New York session because it's ES Futures. So first thing we can see that at market open, we were initially bullish. Then we can see a initial reaction at this high in which we had a bit of a reversal. However, we can see that the reversal was quite minimal because we didn't see any conferences that actually proved that it was going to move to the downside, in which this fair value gap, which you can see, held up quite nicely. So we continue looking in this direction. At this point in which we see this high has been retested several times, we finally see a break at this level. What does this tell you as a trader? So because we've seen a break at this level, this shows that the institutional orders of JP Morgan and Goldman Sachs are finally telling us that we're going to continue that bullish movement we had from the start. So once I see that we've had this bullish candle above this area, I will look for longs. I had a $5 stop loss. Then I targeted the next high that we saw. So it was a 1 to 2 risk to reward trade I took, and I made $100 profit on a 10k. However, I traded 100k, so I made $1,000. So let's have a look at this trade. So what can we tell from this that is going to continue that bullish trend? Straight away in the 5-minute, we had a fair value gap formed both here and here, so that continues my bullish view of the setup. So I continue this. Then, as you can see, we basically inverse this fair value gap. So that confirmed to me that we saw some nice sort of reversal in this area, because institutional orders are now looking at this strong high and wanted to reverse it to manipulate our day traders and hit their stop losses. This is why these untested highs and lows are so important. Let's go ahead and have a look at another example. On Friday, I took a similar setup using this strategy, and as you can see, I already marked out my highs and lows for you. It's simple enough, just go on the 1 hour time frame and look for the untested highs and lows. Next thing I'm looking for is either one of these to be taken or for a reversal to happen at this area. So if we look here, we didn't take those lows. However, we did not react at these highs at all, and we just had a retest back into that high, which makes my bias go to the upside. However, I want to see some sort of confluence for me to confirm that. So if we see this fair value gap get respected, then I'll take the trade. So as we see, come back into that fair value gap, and do we respect it? We do actually very well. So then I'm going to have longs in this area. I have a $5 stop loss back into these highs, and then target these highs for nearly a 1-to-3 risk reward ratio. Let's see if this plays out. And just like that, that's another 1-to-3 risk reward trade. And that's how simple this strategy is. So this strategy basically entails 3 things. 1, highs and lows that are untested on the 1 hour time frame. 2, drops a 5-minute time frame and wait for one of these areas to get reacted on. And 3, wait for confirmation confluence to either one of the sides that you're going for. If you want any questions about this strategy, message me on Insta, and I do one-on-one calls if you want to discuss more about this strategy or my other strategy. If you look at my other strategy, we could also see that I've created an indicator for this, in which it would have been not taking a trade to that day. However, if you can see, I have a 71% win rate using the break and retest model, which you can buy this indicator on Instagram, and it would have made 7,500 on a 50k in the last 28 trades. So that's all for today. Comment if you would like to know more about the strategy, and I'll see you next week.